Welcome to this short presentation, which will take just a few minutes to tell you about the Chartered Accountants Ireland new Chartered Tax Consultant qualification. My name is Patricia Quigley, and I've been working on some of the modules for the new qualification, and it's given me a chance to see what the course is going to offer the student, and give me also an insight into what's different about this particular course. This is a case study which is available for you to download, and it features the Flynn family. It's a very, very good case study for a few reasons. One is that it's based on a realistic family situation, but it's even better because it gives an idea of what you can expect to learn when you're studying the various modules. What struck me about it was that it gives out the actual background in a lot of detail, and it also gives an excellent solution, which is full of technical information, and it comes in the form of a report. But the real bit that jumps out at me is the middle section, which tells you how to do it. And it's a very good example of how this course not only gives you a qualification as a Chartered Tax Consultant, but also gives you training in how to work competently as one. So I'm going to look at the middle section and show you how it teaches you to get from the beginning to the end and clears up the mystery of how to do the report. The Flynn family have a lot of businesses, and in the background to the case study, you will find that there are a lot of issues to consider before you get near the tax. Firstly, you'll be brought through the steps to implement before you even start drafting your report. The first thing to do is to take a detailed file note when you're at the meeting. This file note is very important for your own information and for the file, and for risk management reasons that you'll need to look back at later on. It also reminds you that with any job that you're doing, you need to agree a timescale. You need to be happy that the timescale that you can do the work in is realistic. And you need to have a very good understanding of what the Flynn's wishes are. There is an awful lot of information given in the background to this case study, but you can expect to see that in practice. We're not even getting near the tax issues yet. What about conflicts of interest? There are different parties involved here. You have a few different businesses. You have two sons, you have parents, and then you have a local store manager who's not part of the family. So who are your clients? You're shown in this case study that it's very important to identify who the clients are. In this case, they're Mr. and Mrs. Flynn. They are the shareholders in the family business, and they are the decision makers. This will make it clearer for you in the advice that you're going to be given. The children of the Flynns and the local manager are not your clients. The meeting at which you sit through with the Flynns gives an awful lot of background information. You need to think, before I write this report, do I need to meet the Flynns again? Because after you go back and do your preparation work, you might find that there are issues that you need further clarification on, or you may have more questions. You may also want to go back and just check that the assumptions you're making are correct. You might also need to ask them about Patrick. You know that they want to support him financially, but exactly how much are they prepared and willing to give? And have they thought through how they will live after their retirement and taken that into account? Now, the favourite topic, risk management, has to be done, and you are responsible as a Chartered Tax Consultant for putting the risk management procedures in place and for following what you need to do according to the organisation and obviously the professional body that you belong to, and law. First step, the engagement letter. The engagement letter must be properly drafted by you. You may not be the ultimate signer off of this letter, but you need to set out the scope of work. You need to agree perhaps not the exact final fee, but a range of fee or how the fee levels will be charged. You also have to put in place know your client procedures and money laundering procedures. The Flynns are a new client in this instance. Now, when risk management is finished, you need to look at researching. There are not only tax issues in this case study, but also commercial issues. You have to figure out, are there other specialists needed for other parts of the work? You need to look at who you need to speak to before you do your report. In this particular case with the Flynns, you need to talk to the audit partner and manager. They have, an understanding of the business that you won't have, just coming in on the tax side and being new to the case. The Flynns have a personal tax advisor who is outside of your firm. You need to speak to the tax advisor, both professionally to clear up any ethical issues and also to get their input as needed. And you need to consider Michael, one of the sons. He used to work with the firm that you're with, so you want to make sure that there's no conflict of interest arising out of that. And then you need to make sure that you know who the actual share and property owners are. And you're still only on the risk management end at this stage. At last, you can look at the tax issues. Researching tax. You will learn this throughout the whole Charter Tax Consultants course. The legislation will always be your primary source of research. You'll also have as backup revenue publications, tax booklets, and databases. And if you're working in a very large firm, there might be a very good database and library available to you. What is excellent about this case study is that it doesn't give you one solution. It shows you how to consider more than one solution, and in fact there's very rarely a perfect solution, particularly in a family business situation such as the Flynns have. And the case study does exactly this. It goes through 3 options in a lot of detail. It looks at a possible transfer of shares. It also looks at transferring the trades. And then it looks at a partition of the business. And it goes through each of these in a lot of detail and covers all the tax technical issues that would arise out of it. I hope that has given you an idea of how practical this qualification will be. You would be many years trying to study or pick up the practical skills that you get on this course in what might be called on-the-job training. It's a very detailed and comprehensive case study. Do take some time to read through it and take the first step, enrol by 1st of September and start on the road to becoming a chartered tax consultant. Thank you.